Good morning and welcome to today's scenario modeling, strategic modeling webinar. Welcome. Thanks for joining. I'll introduce Andy, Lee Joy and Madhu in a few minutes. But as I said, thanks for joining. And before we get started, I wanted to ask a quick question. How many of you have ever had an executive walk in and ask what seems to be an innocent question, what happens if? And you immediately think, hang on a second, this is not going to be a simple question. What if they say, what happens if rates move? What happens if Trump wakes up in a bad mood? What happens if the price of oil? What happens if we move our workforce? And it turns out that before you know it, you and your team, you're huddled around a bunch of spreadsheets, or ideally in Oracle, and you're trying to figure out how to answer these difficult questions. And in banking, often answering what appears to be quite simple questions can actually take days, weeks even. And so the problem really isn't that planning cycles have got slower. The problem is the world is moving faster. And that's what we're here to discuss today. Over the next hour, we want to explore strategic planning, why it's become harder, what leading banks are doing differently, and how modern modeling can help finance teams make better, faster decisions. And we're going to do that with the help of Madhu, who's going to give us a live demonstration of the Oracle solution and also some examples of how AI can be applied in that scenario as well. So exciting times. Now, a couple of housekeeping things. We are recording this session, so everyone will receive a link and a copy. You should find on your screen a button to ask any questions. Feel free to do that. And what we'll do is we'll take those questions right at the end, and we'll try and get to as many of those questions as possible. And as I said, we'll send you a recording, but we'll also send you some key takeaways from the session before the end of the week. So again, thank you for joining. And briefly, let me just ask Andy, and let's start with you, Andy, if you want to just give yourself a little introduction.
Yeah, thank you, Paul, and welcome everyone. Andy King, I'm Senior Director within our product management team here at Oracle, looking after EPM across the EMEA region, and in particular, sort of the deep planning capabilities, so the sort of stuff that we're going to be talking about today. Pleasure to meet you all, and I look forward to chatting with Paul and Lee Joy and Madhu.
Thanks, Andy. And Lee Joy, you want to give a brief intro?
Yes. Hello, everyone. My name is Lajoy Verghese. I'm a partner with Riven, specifically focusing on finance transformation. I've spent all my life doing finance transformations within banks. So that's about me. This is a very, very interesting topic, something that's very, very relevant. So I'm very, very excited to be on this webinar.
Super. Thanks, Lee Joy. And Madhu?
Hello, everyone. Hello, everyone. This is Madhu Sethuraman here. I'm a partner at Revens. I've been doing, finance transformation using Oracle EPM for last 20 plus years. Mostly in financial services and banks. And before that, I'd done a brief stint in Oracle ERP as well. So I love doing this, and I'm really excited to show you this today.
Thanks, Madhu. And obviously, we want this to be focused on the content and less on the companies. But just one little thing about Revent. So we are an Oracle partner, Oracle-only partner. We specialize in implementing Oracle solutions, particularly around in the finance transformation space, around EPM. And we do that with a pedigree, basically focusing exclusively on the banking or financial services sector. So enough of that. Lee Joy, you've worked in banking for years, and you've worked with finance teams in major banks. And when a CFO or finance director asks, what happens if we change this assumption? Why does it take these days so long to get a credible answer?
Yeah, very, very interesting question. And yes, I've worked in banks all my career, around 18 plus years. They say the sins of the past always haunt you. So maybe it's one of that I've always worked in banking. But the world has massively changed, right? If you look at, the history since, 1930s of all the events that have caused disruption in the market, since COVID, we have seen these disruptions being extremely, extremely more volatile than ever before. The finance landscape is extremely, extremely complex. So when somebody comes and asks you, okay, you know what, I want to make this assumption, I want to make a change to any of the macroeconomic variable, for finance teams, it is extremely important that they understand that it is a very, very complex being. They have to ensure that let's take an assumption of, there's an inflation. it would mean that obviously the OPEX of the bank would increase. So the cost team has to go and do their analysis. It would mean that maybe, the base rates would change, which means on the revenue side, they need to think about what is the impact of that change. It will have a direct impact on impairments as an example, because, inflation also impacts employment. So there's an impact on impairments. Then you go to the balance sheet, the entire cost of funds change, the FTP changes are alongside it. So there is so much to be done. So when a simple question like that is asked, it effectively means the entire finance department is now coming together to figure out how to find that answer. It's not a simple answer that can be provided. It requires so much more. Now, if I go back 5 to 7 years, this answer could have been given by what they call as, SME expertise on the street. So somebody would say, oh, I've seen this before. It is probably this sort of change that it would bring. But clearly the world has moved on. It's all about scientifically showcasing what the impact is. It's no more about finger in the air. This is what I hope will happen, but rather scientifically proving. So in effect, there are two parts of the answer. When a CFO comes and asks this question, the entire organization has to come together and produce that answer in a complex organization. And number two, it has to be scientifically created. So that's where we see a massive, massive difference.
And I guess you've been working with finance teams, as we've said. What are their most common and biggest frustrations you hear now when you're talking to finance leaders about this?
So while the world has become more scientific, obviously, and there is, much more connected nature in terms of people thinking since COVID, what has also happened is that the volatility in the market is much more, which effectively translates to the fact that what we hear FP&A organizations, planning and analytics organizations, is that they are in this continuous chasing the tail sort of a position where they're continuously planning, because every day there is something new that is happening, right? You said about this when we started off, who knows how Trump wakes up today and what's going to happen in the market, right? Every day is different, which effectively means the planning teams are feeling extremely exhausted. So they're continuously changing the assumptions and coming up with something new. Now think about a scenario where generally, a plan would take 2 weeks, 3 weeks, sometimes a month. And every day the assumptions are changing. So the baseline based on which you're creating the plan is changing, which effectively creates a massive amount of frustration to FP&A organizations. They are not able to give credible answers, right? They have to cut corners to go back to their board and say, well, this is what we feel is the position based on the assumptions, but the assumptions are now stale. And that big star asterisk that they put, the assumptions are now stale, effectively puts water into all the effort that they've put in terms of creating the strategy.
Yeah, that's frustrating. And I mean, Andy, from an Oracle perspective, do you see the same challenge? What kind of gaps have you seen? Or why do you think those gaps exist?
Yeah, I mean, similar. As Lee Joy says, I think if you look at organisations, I don't think they really have a modelling issue. They have a connectivity issue, and it's about a separate model for Lee Joy saying impairments. And there's someone who owns that, but it's not linked directly into other areas. And we see far too much time people gathering, reconciling, checking data, rather than actually delivering the insight that matters. So for us, we believe we've advanced the technology manyfold over the last 20, 25, 30 years, but obviously over the last 5 years. And I think that sometimes has evolved quicker than planning operating models. We all know the issues with Excel, but it's still the tool of choice in a lot of those instances. So for me, I think it's probably summarizing a little bit, Lee just said, I don't believe the bottleneck is the calculation. It's the connection. And that's the issue. People in their silos can do their piece, but how do we then connect? Because a strategic question like, that you said, hypothetically could be asked, needs so much data across so many areas. And it's not just picking up, one little piece and going, oh, that little model spins really nice. How do we pull those together? So for me, it's about connectivity and taking on, the advancements in, the advancements in technology and matching the planning processes. And I still think they're still out of kilter.
Yeah, I mean, we've seen this across all the banks that we talk to, particularly in the UK, but I've seen it in the Nordic markets as well, where it just feels as if planning is still a siloed exercise. And each area, workforce does their plan, capital does their plan, finance does their plan. and really there should be a plan, not multiple plans. And that, I think, is one of the big challenges. And I suppose that should be a driver for change, and again, Andy, just back to you or Lejoy, who do we think is actually creating the pressure for change in strategic modeling or scenario modeling? Where do we think the demand for it is coming from?
I mean, I'll take a punt at it, and then Lejoy can maybe go. For me, I think it's everywhere. To be honest, Paul, the boards want quicker, faster decisions. The regulator wants, more transparency, more stress testing. The business leaders need, answers more rapidly. And I think, and then, as Lejoy has already said, the market volatility, is far beyond what it used to be. And so, all of those mean that if it's finance that owns those plans, they're expected to work in near real time to be able to answer those questions. It's no good to say, that's great, I'll have that answer for you, but we need 3 weeks to spin all these models together and connect it. So for me, the pace of the change is being driven by all aspects. It's not just an internal thing within an organization, it's the whole area. And again, we're very focused on banking today, but it's the same in a lot of other sectors. The changes, the assumptions we used to be able to use. I was talking to energy companies last year, and they say we used to be able to give a rough estimate of 20 years of oil prices. Well, we know what's happened this year alone. And so, they're saying the assumptions they used to be able to hold and sort of keep, they change a little bit, but they're changing by the hour, let alone by the day. And I think, just as so, other sectors are, similar. It's not, this isn't just peculiar to banking, but, for me, that's it. It's that pace of change outside, it exceeds the sort of pace of change that organizations can maybe deal with on a planning perspective. So,
Lejoy, yeah, just back to you. You've worked with lots of different leaders. How have their expectations changed? My experience is sometimes that the top level, they don't necessarily care how the numbers are arrived at because it's not their pain, right? As long as it happens. But I don't know. What are you seeing? What do you think has changed in terms of how executives are thinking now?
Yeah, so the pressure point is obviously, right? The board, the overall, regulators, what they're coming with, business leaders, they're all important, but the market in itself, right? Obviously, right, we're all talking about the SpaceX IPO and $1 trillion company being raised, right? 1.7 trillion is the valuation that we're talking about. It's unheard of. This effectively means organizations now are hungry for more. Although there is volatility, it also means that for organizations, there's the opportunity to really hit it big. There's always, in the finance world, we say with every 10 basis point increment in the ROTE, it actually translates to 30 to 40 million to the baseline. That's a big amount. So the focus slowly, while cost pressures are important and everybody was trying to reduce the cost and bring it down, the real big levers have been the people who've been able to unlock the ROTE and say, I'm going to generate more revenue, which effectively means strategy is not simply, for me to be able to hit my target, I'm going to reduce my cost. There is so much more to it. And that market pressure is what is also one of the key reasons why everybody wants to do multiple mechanisms of strategy modeling. They should have very, very clear understanding of what their strategy will be if something happens. They want to be ready with it. Now, obviously, we've all talked about this enough. The challenge is with the volatility, there are so many possible strategies. So the pressure point effectively is the fact that you have to be, number one, correct directionally. We were in a world, at least pre-COVID, a little bit where everybody had gone into absolute detail. Everybody wanted every detail, every line to be, right to maybe, 10 decimal points. I don't know. But now they're saying, no, I don't want to go to the absolute correctness. I want something to be directionally correct. That's very important. That's one thing that has changed, right? The other thing that we also see is changing is the fact that while things have to be directly correct, there is no space for what is called as guessnomics, right? You are no more guessing, right? You have to say, here is the number. I've arrived at this number because of these details. So going back, drilling into the detail and saying, this is how the number was arrived is important. And that's where I'll connect to what Andy said, right? He's absolutely right in touching base on saying, hey, you know what? It has to be connected planning. So if I am arriving at a ROTE, I need to know this is where my impairments are. How did I arrive at that impairment? What were the factors that impacted that impairment? If I came up with a cost of funds, what are the balances that I picked up? What was the FTP around it? How did I run it? What is the cost of fund? All of that has to come together. which effectively again translates to the same challenge, right? You have to be much more fast, you have to be nimble, you have to be directionally correct, and you have to be scientific. And the market opportunity is massive, right? And so we are not playing around with, yeah, it's all right, we'll go as is. There is a massive market opportunity to be won, which is why everybody in the exec is hungry for more and they want more and more answers.
Yeah, I mean that's interesting. I mean, and Andy, you've got this great kind of world view of things from an Oracle perspective. So obviously, change is as we're saying, the market's moving faster. It's not necessarily that the planning processes are slow. What have you seen in terms of leading organizations? We're going to, in a second, I'm going to get Lee Joy to talk about the North Star, what does good look like? And we're going to do the demo in a couple of minutes. But just before we get there, what capabilities are you seeing leading organizations invest in to address this challenge? What have you seen across the Oracle market?
Yeah, and I think where we've seen that change over the last few years. If you go back a few years, it was sort of point stuff, focusing maybe on balance sheet P&L, and that sort of more financial style. And I think the shift we've seen over the last 5 to 10 years is more into that full connected planning. So back to those points. How do you tie in your workforce, your operations, alongside all the stuff that Lee Joy was just talking around, for the more sort of revenue side. And then, it's how do you start to do those scenario modeling? How do you bring in, driver-based plans, continuous forecasting? Again, we believe we've made it. There's a pretty big shift, and there's more shift to come, which I think we'll touch on a bit later. But to more continuous forecasting. This can't be something that you look at quarterly, half yearly, even monthly. To be honest, to all the points we've already made, that just doesn't work anymore. So it's moving towards those systems and having solutions that can help them do that. Nowadays, and especially over the last 2 to 3 years, where's that embedded AI, predictive analytics in process? We know there's solutions out here that does these things, but in process to do it. So for me, the shift for me is from, and what I try and like to talk to organizations about. This isn't just about planning anymore. This is about delivering a decision-making solution. And that's what it is. The fact we wrap it as a sort of planning piece is by the by. It is about how do I make decisions, and how do I do that rapidly in not in real time, but as close as we can get to making those areas. So that that's where we see people investing in, is way beyond sort of just thinking about these in silos. And it's no good having a good workforce planning solution and not a great piece over here. It's about making sure those are connected and and at the right depth.
That's great. In fact, one of the things that I know from a Revance team perspective we do when we're working with banks is we really do try and focus on decisions and working back from decisions, and then building out even sort of KPIs around decision screens and how how many of those are we delivering that the bank is actually using. So let's pivot. I think everyone on this call, we know what the problem is. I think everyone has an appetite to solve it. So let's focus on now, if we were starting again, if we could design the ideal planning capability from scratch, and we could really look at this at an enterprise level. Lee Joy, a question for you. What does that look like? What does the kind of North Star, what does the ideal end state actually look like?
Yeah, I mean, I think in my experience, I've got two very, very good examples around this in terms of the North Star. I was working with the CFO of a large British bank, global bank. And when we talked to her about, what will be an ideal North Star, and she said, listen, I want to sit on my holiday and I know I'm sitting somewhere peacefully and I figure out something massively has changed and I need to go to my iPad or, my tab or my machine and just quickly model something and see what is the impact and then direct from there what's going to happen. So it has to be almost like I'm just sitting on my comfy chair and I'm able to quickly do it without calling in loads of teams and asking them for lots of information, so on and so forth. So it has to be served on a platter to me from where I can go and do my modeling. So that's one use case. I also worked with the head of strategy planning, FP&A, at a big British bank, and we had this, a workshop session where we were brainstorming, what is this North Star? And he came up with this wonderful, analogy that he put together. He said, listen, I've got little kids who love playing with Lego. And he said, that for me is the perfect North Star for a modeling tool. You can create, you have got your own bricks. You can use that as you would want, which means you can create your own baseline. With the baseline, you can create your own models. As you're creating a model, you are seeing the shape coming together. That means live reporting. If you don't like something, you can break it and remake it. That means you have the nimble nature to be able to create scenarios on the fly. And then you can compare multiple models and say, oh, this is what I made, this is what you made, which one is better. That also has to be real. So he said, you know what, for me, the best modeling tool that can be there is a replica of Lego bricks in the finance world. That's the North Star. What does that translate to? That basically means that finance organizations are looking for a tool that they can sit in a boardroom with all the key SMEs and they can discuss. And while they are discussing, decisions are being made, dashboards are being created. They can say, oh, you know what, change this particular macroeconomic variable by 10 basis points and show what the impact is. That should happen almost real time. And then they can take decisions out of that. So that's very important. That is what the North Star today is.
And what about frequency? I think Andy sort of referenced the idea of continuous planning. What's another kind of benchmark of what good looks like?
Yeah, I mean, no, there is always a debate about, how much is too much, right? But with the volatility today, we have seen banks using, strategy modeling tools to be able to create more than 200 scenarios in a year. That is almost a scenario a day that translates to, oh, you know what, are you really going and changing your strategy every day? No, not at all. But what banks want to do, they want to ensure they are ready for whatever situation it may be. And there are so many possibilities, they want to prepare for each of the possibility. So the frequency as such has to be continuous to what Andy said. Banks are continuously moving away from looking at forecasting and planning as two different cycles. They say, I want to do continuous planning where my forecast is for the next 2 years, 3 years, what not. It provides a very clear view of the future, and I make changes to my macroeconomic variable that creates my plan from there. So they are connected. So forecasting leading into planning has become a theme today that we had not seen previously. So it is a continuous cycle as such where you're continuously fine-tuning yourself to be able to get a better ROTE compared to your competitors.
Now, I'm going to get to Andy in just one second, but a thought has crossed my mind, Lee Joy, based on some of the conversations we've had with banks and other, finance institutions. It always feels to me as if they think this is an impossible dream and that you have landed from the Thunderbirds and you're a hand-wavy mad scientist and none of this is actually possible. Let's get real. I know that we've done this work at banks before. Let's give people an idea about how long it actually takes and how feasible is it to deliver a fully connected plan.
Yeah, see, I am a big fan of the Oracle EPM technology, and the possibility with that technology is frankly limitless because compared to some of the other tools, the way the technology has been built, it gives the foundational tools for you to build a really, really good strategic one. So the technology is absolutely brilliant. So it's very, very important to know that when we invest in a technology, it has to be enterprise-wide. I cannot have one technology for my workforce plan, another technology for my impairments plan, another technology for my revenue planning, another technology for my, planning for my volumes and all of that, because then connecting them becomes difficult. What Oracle offers is a brilliant technology that can be modeled as you would want. It's actually the Lego bricks that you can model upon. So that's really, really good. With a technology like that, and I sort of put that preface because you need to have the right technology stack. With a technology like that, we've been able to deliver a world-class strategy tool in a bank that is, big, 13.2 billion cost base, a much big, balance sheet. So, a proper tier 1 bank within, 6 months time frame. With the first go live actually happening in 4 months, they were able to go and model their first scenario in 4 months. And from there, we went on and built on. And it was absolutely good. You could do impairments, cost, capital, goal seeking, all of that in one screen. So it's very much possible to be able to deliver something like that.
That's good to hear. And let's switch to Andy, because again, I love the fact Andy's got this kind of more of a global view as well. So from your perspective, and you look at what leading banks are doing globally, what separates the most advanced organizations from everybody else?
Yeah, I think there's an interesting one. I pick out in just terminology, because when you switch there, Lee Joy was talking around about modeling. And it sounds a really simple thing, but if you're talking around doing planning, that to me still sticks in that's a budget. That's a slow, cumbersome process. You talk about forecasting, that's still, let's do that monthly, maybe weekly. But when you talk about modeling, that's the whole, I always do this. He's turning that dial. Well, what if we do this? What if this happens? What if? And that's a very different style of planning. And I think so. Just from a terminology perspective, I think it's an interesting approach. And I think that's where the organisations I see that that can bear those, and the example that Lejoy gave. That's more that modelling basis. They've connected at a level. I don't know. Does it have right down at the lowest level? No, it's got the right level to have that piece. And I think there's far too much focus on reporting outcomes, and actually, we need to model options. And again, that's a very distinct, difference in approach to what they're doing. And again, just some of the banks I've worked with over the years, that switch, to be able to go from let's do these big cumbersome plans where we add everything up and it takes us, 24 hours to see a complete answer. That was fine 10, 15 years ago, but it's not fine now. Those same organizations now have got that, let's turn the dial. So what if, something happens, within the organization. So it's trying to drive that whole piece, to do it. And for me, I come back to, it's all about making finance decision ready, not just someone who adds some numbers up and looks at what's happened. They've got to be able to business partner with the rest of the business and be that strategic direction, going, well, we've run these models, guys, and we've run 2 or 3 different ones. Let's work out then, help you work out what your direction of travel, your course correction might be as an organization. And
so
that's where I see it, and see that change.
Yeah, I mean, it's really interesting. So I think, Andy, you're signaling it's the end of FP&A.
Absolutely, 100%. Yeah.
It's financial modeling. That's what we need, not financial planning, financial modeling and analysis.
Yeah,
I'm sure there's a few FP&A folks listening in. So
exactly. No, I mean, obviously, it's changed to what we're doing. I guess if you look at certainly what we're working on, and we've got lots of AI capabilities and technology trying to help. Back to one of the previous points, technology is enabling quicker, and and our planning process is working, keeping track with that. Yes, in some areas, and not in others. And I think, for me, we believe, a lot of the planning requirements, however you wrap that up, for all organizations, regardless of sector, is going to change that more outcome based, because organizations have got to be more rapid in that decision making. So we believe over many years, this is probably long after me and you retire, Paul. The other guys are younger than us; they'll be all right. But it's going to be more more outcome based, and maybe this formal let's do a forecast every month, every week, and maybe those are going to reduce, and it's going to be much more outcome orientated. And and we believe with the technology advancements and advancements in how organizations are structured, that's maybe the course. And again, if you speak to people far more intelligent than me, look at these sort of processes, that's maybe where they want to work towards.
I mean, to be honest, sorry to interrupt you there. I mean, Madhu's going to show a couple of things in a minute. We're going to get to the demo literally in 1 minute. And he's going to show some of the AI stuff. And I think perhaps for some people watching, listening, it could be quite an eye-opener. I think the future is coming faster than we all think, to be honest. But before we get into the demo, just last bit of roundup, Lejoy, just very briefly, business benefits. Right. What have you seen? What are the core? I mean, you talked about the basis points movements a second ago. At the end of the day, we want to deliver value. It's not just about the technology, right? What value? What are the outcomes for the CFO from making investment in building this connected modeling framework?
Yeah. So as I said, right, the opportunity is big now, right? There is a fundamental shift in how planning, forecasting, reporting was being done. The big organizations in the world, the big tech giants, that are there today, we're talking about, trillion-dollar valuations. They don't care about what is the cost associated with a desk sitting in that place, right? They're not associated with the cost of the, network wire that I'm using. No, that's not a question anymore. It's about how do I ensure that I'm ready to make the next big leap for any changes in the market. I have to be ready to actually grab that market position. That pole position is extremely important. That effectively translates when I'm going back to that basis points, right? It's not about reducing my cost, by, whatever, 20 million, 30 million, whatever that is. It takes a lot of time and effort to do that. It's much more about how do I increase my ROTE by maybe 10 basis points, which gives me a 40 million uptick on revenue, which puts my share price up high. That's where the difference is. The bank where we delivered this, who were able to do, 200 scenarios, their share price went so much higher in that 1 year alone because they were ready for every scenario. They were ready for any volatility in the market, which effectively meant they were only taking right decisions. And those right decisions don't come when you're really guessing, said, oh, let me be reactive to what may happen in the market. So the
Yeah.
business outcome is I am proactive. I am ready for any uncertainty that is going to become. To
Brilliant.
be able to be ready for the uncertainty is where the big win is. And I
Yeah.
think that's a big outcome that we are seeing.
Fantastic. Madhu, it's time for you to help us move from theory to actually looking at how this stuff works. So for the next 20 minutes or so, Madhu's going to give you a teaser, and I have to let everyone know that we've really given Madhu a very tricky job here, because showing what's possible in 20 minutes is a bit unfair. But Madhu, we know you can work miracles, so over to you.
Thank you, Paul. Let me show you, what the modern strategic modeling could look like. Yeah. But before that, I have to give a little bit of a short list of tasks to my FP&A agent. So what I've done here is I'm giving, the FP&A agent to produce some of my reports. I want to look at income and profit before tax mix by businesses, and, show me the best performing cost income ratio and ROTE by quarters. I want a breakdown of, commercial banking for the profit before tax, and visualize that as a waterfall chart from, for 2022 to 2025, and how macroeconomic variables are impacting my retail bank profit before tax for the 3 years. And I'm also giving a task where it is going to, create a new version of my scenario, turn off a few adjustments. Yeah. Post a litigation related adjustment, and do a comparison between my base scenario and the new version. Yeah. So let me go through with it. While my agent is working in the background, let's actually go through the demo. Yeah. So this is the landing page, and as you can see here, there are multiple scenarios in play. A 3-year strategy, looking at the tariff impact or inflation impact or the oil price, fluctuations, other business what ifs, etc. So the scenario planning tool is not your regular forecasting or a budgeting sort of tool. Yeah, it is for something where you want to create a scenario for today's situation, or a situation that you are expecting to come through in the next few days or the next few weeks or the next couple of months. Yeah. And so you might end up with, like Lijal was explaining, you might end up with so many scenarios because the world is changing, pretty much every day, every week. Yeah. So, and this is the tool you will come to look at how it is going to impact your business performance, and, look at all your key metrics and KPIs and the impact on them. Yeah. So this is the, and all these scenarios, these are not like, spreadsheets. They're fully connected, versioned, auditable scenarios, each one modeling a different view of the future. Yeah. So let's look at what we actually need to create such scenarios. See, of course, when you want to create a quick scenario, let's say within a matter of a day or a week, or even a few hours, you need all the, the right kind of data set behind it. That's what I call the baseline data sets. Yeah. So I would probably, use the baseline as actuals. Some of the plans that I did, a couple of months back, the quarterly forecast I might have done, a couple of months back, those are my, backbone of my strategy planning tool. So I'm going to bring in the P&L balance sheet, capital liquidity position for those baseline data sets, and also the associated assumptions. It could be FX rates, macroeconomic, variables, and other management actions and strategic initiatives that were part of those baseline data sets. Yeah. So that forms my baseline. And let's look at, what the actual scenario creation is going to look like. So here every scenario, there is a bit of a workflow there, all the way from the library to the final submission. So you can see every stage of that scenario. So for example, we build the baseline, we run some sensitivity analysis. It could be FX sensitivity, macroeconomic sensitivity, apply some top-down adjustments, and you push it down. And you also make some strategic initiatives and decisions and management actions, capital planning, dividend distribution decisions, etc., all the way up to finalizing one version of that scenario. And you can just keep repeating it for another iteration after another iteration. So yeah, that's your entire sort of set of options that you will have. Yeah, again, whatever options we show here are all customizable. So this is like a framework. We have actually picked up all the key areas we thought are going to be really useful when it comes to financial services and how they do their strategic planning and modeling. Okay, got it. Okay, so the next screen, so this is showing you the scenario library, and this gives you a sense of scale and the governance, and how serious we are about these scenarios. Sorry, that's the adjustment library. So you will have different categories of scenarios. You have the entire group scenario, so which means the group strategy team or FP&A team are going to do the group scenarios. Sorry, I think it's taking a bit of time when I'm doing screen share to render the screens. Bear with me.
It's coming.
Yeah, okay. Yeah, and you've got other buckets of scenarios as well. So for example, you could have secret scenarios. So let's say you are having some big acquisition going to happen, mergers and acquisitions, or you are going to make a big restructure which is still non-disclosed, it's not public information, that sort of stuff. It's probably is only for eyes of a very select few, even within the organization. So those are secret scenarios. And you can also have buckets where various businesses have their own play area or a sandbox to do their scenarios. So you can do insurance and planning. They have their own sandbox. Commercial banking, they have their own sandbox. Retail, the back office, capital team, so treasury team, they can have their own sandboxes and they can do their scenarios. And each scenario here, you have a complete information about that scenario, why you created that scenario, who owns that scenario, how many iterations of that scenario you have, who last updated it. So it's got the full log of what is happening in these scenarios. And the bottom section here is giving you a quick preview of what these scenarios look like when it comes to various measures. So let's say I want to look at strategic scenario 1. So it is going to show me what is within my strategic scenario 1. Of course, I'll be able to look at all the versions within those scenarios. Okay. Let's go to the first part here, which is the baselining of the scenario. So baselining, as I was explaining it to you, if you have to create a quick scenario, you will have to start off with the baseline. And the baseline being, it could be a 5-year window where you have a couple of years of actuals, 1 year of current year forecast followed by a few years of plan. And that could give you a quick baseline for the scenario that you're about to create. And when you create that baseline, it is also bringing along with it not just the financials, but all the assumptions alongside it. So which means you're going to get your FX rates, macroeconomic variables, currency mix, all the assumptions that went along with with those baselines. You bring it all together and create the baseline of a scenario. So you can see the entire P&L balance sheet, KPIs and metrics here for the new scenario, which in our case is strategic planning demo scenario version 1. If I want to look at the FX rates, I can just quickly maximize this. So this is my FX rates for various years. And I'm also able to visualize, as per the baseline, what is the sort of business mix I have when it comes to income or profit before tax or cost. So I should be able to look at it from here. So let's say I want to look at profit before impairment. Yeah. And this is also giving me the legal entity mix. So everything is driven off the data from the baseline data sets in, so far. Now we are, on to actually making making use of the options or levers within the strategy planning scenario. So let's say we move on to sensitivity analysis. You've got two sensitivities. One is FX sensitivity and the other one is macroeconomic variable sensitivity. Yeah. So some of your scenarios, are, having a larger, currency exposure when compared to, other parts of, some of your businesses have larger currency exposure while some don't. Yeah. And when there are currency fluctuations, maybe USD gets stronger or, Euro gets stronger, of course, it is going to impact those businesses where there is a bigger currency mix. And that is what this FX sensitivity is going to tell us. Yeah. So the way you will activate the FX sensitivity, again, for all these options, you have the on-off switch. So you just switch it on or switch it off to look at the impact of any of these levers. Yeah. So in here, I'm able to switch on or off the FX sensitivity analysis by year. And I'm able to see the currency mix of various businesses here. So for example, this is a private banking business. I should be able to look at other businesses as well. Let's say the commercial banking business. So these are the FX exposure these businesses have. Of course, income has more exposure than costs. And some of the other, balance sheet and capital related, risk weighted assets, for example, and has got a bigger currency exposure again. Yeah. So when I turn it on, I'll be able to feed in a new set of FX rates here and look at how it is impacting my scenario. So what I've done here is for 2026 and 2027, I'm using a new set of FX rates, and I'm able to see that there is an impact when it comes to FX sensitivity on these years. Yeah, I've got a 480 million. Where my profit before impairment has gone up by 480 million because the FX changes are favorable to us. Yeah. And I'm also able to visualize how it is impacting each of these businesses. And, what are the key financials that are being impacted because of this FX fluctuation? Yeah. Or potential FX fluctuation. So I can see impacts to income, PBT, RWA, smart tangible equity, CET1 capital, etc. Yeah. So it's and let's say you want to switch off for the rest of the years because you think, whatever you've assumed as part of your plan FX rates for 2028, which is like close to 1.5 years away from now, is not going to change, which means you can keep it as off. And so the impacts are only going to be in 2026 and 2027. Yeah. So that's FX sensitivity. Now, moving on, the macroeconomic variable sensitivity. Again, here, there could be, depending on the business again, there could be so many, macroeconomic variables that are influencing how your business is performing. So let's take mortgage, for example. Yeah. If it's a UK retail division with mortgage products, then it is going to be impacted by house price index, UK base rate, inflation, unemployment, and a few other, macroeconomic variables. But if it's a, different sort of a business and different sort of, exposure that it has, maybe it's an international business. So you will have lots of, S&P index or a volatility index, that's probably going to impact, how your business is going to perform. Yeah. So that's what we're seeing here. So what what you're looking at in the middle here is what is my scenario macroeconomic variable. So this is just like how we were able to flex the FX rates. We are able to flex my our scenario macroeconomic variable in the context of the scenario version. Yeah, I'm able to change some of these key macroeconomic variables. Of course, if you think you need few more, let's say you want a Germany inflation here, you should be able to just add that as part of your maintenance of the model. Yeah. And it's all self-service again. Yeah. And you're able to see, okay, what all macroeconomic variables have changed. It's changed from 2027 all the way to 2030. 2026, I'm using the same macroeconomic variable as my baseline, so nothing has changed. So if I look at my 2026, there is no impact due to the macroeconomic variables because I'm assuming nothing has changed in 2026. Whereas from 2027, I've changed my macroeconomic variable and I'm able to see how it is impacting. Yeah, I can see that UK base rate has got the maximum impact, followed by UK house price index, and certain other businesses are impacted by US federal funds rate, a 10-year swap, S&P 500 index. There are so many macroeconomic variables. Yeah. And the way it does this calculation, behind the scene, is we have all these sensitivity models out there, as all of them are focused on certain businesses or sub-businesses or products. Yeah. So there, it has the correlation between, how these models work in conjunction with the key macroeconomic variables within these models and what are the key measures it is impacting on these businesses. Yeah. Using that correlation, it is, doing a linear regression or an exponential regression, and, it is able to come up with how it is going to impact your scenario. And it shows you how it is impacting the various businesses. Of course, this walk explains how it is impacting your overall scenario. Yeah. So I can see that macroeconomic sensitivity is pushing up my profit before impairment by 700 million. Yeah.
So Madhu, this is a terrific. Thank you. I know we're asking you to squeeze a lot in. We've got just a few minutes left with you.
Yeah.
Do you want to switch back to the AI impact or the role of AI?
Yeah, I'll probably show that in the last 2 minutes. I'll just show a couple of other screens here, and then we're done. Yeah. So just like how you have adjustments, you can do top-down adjustments, or you can do bottom-level adjustments as well. So these are like top-down adjustment screens where you say, I want to have a 5% cost reduction for the entire group, and you do that at the top, and then you push it down. Yeah. And these are different. Again, you can turn on these adjustments, turn off these adjustments, and you're able to immediately see how it is impacting your businesses. Yeah. And moving on to the, management actions and strategic initiatives, it's almost like you have a big adjustments library. So again, each adjustment library, each adjustment within the library comes with its own, P&L impact and balance sheet impact or RW impact. So when you turn it on or turn it off, the impact of that will be shown in the scenario or switched off. Yeah. So that's how you manage the adjustment library. Again, you can copy adjustments from one scenario to another scenario. You can right click and create new adjustments. Yeah. And you'll be able to see the impact of these adjustments. So for example, when I look at the tariff easing adjustment, which I have turned on, I should be able to see how it is impacting my businesses. Yeah. Okay. And one last interesting piece here, which is the capital piece. See, so far, everything is connected. So whenever you are making a P&L adjustment or a balance sheet adjustment or an RWA adjustment, it is automatically, if it has got an impact on capital, it is going to flow through to capital. So everything is connected. Yeah. So you don't have to do those adjustments separately in the capital space. Now, what I'm going to show in the capital space is the goal seek capability, when it comes to dividend distribution. So just like, how you're making, a number of key decisions, what you're going to give back to the shareholder and how much buyback you want to do is one of the key decisions, the banks have. Yeah. So as part of this, you set your aspiration saying, I want to do 20% or 22% year-on-year growth when it comes to dividend per share, and how I want to pay back to the my shareholders, and how much buyback I want to do. So what you see at the top is the goal setting process. So this is what I want to achieve, when it comes to dividend and buyback. Yeah. And then the system automatically calculates that for you and gives you the best possible dividend per share you can go with and the buyback you can go with. So it is able to do the goal seek automatically for you. You can see that in the goal seek results, it's able to achieve the 50% total payout ratio and the 22% year-on-year growth. And it also makes sure while doing it, it operates within the constraints, which is is it still hitting all the regulatory thresholds and regulatory requirements or management targets? So it makes sure the constraints are applied and it does not go below any of these thresholds. Yeah. Okay. Now let's quickly go to reporting. Of course, you can do boilerplate reports, dashboards, etc. So I'm just showing you a boilerplate report here, a full scenario analysis, a business capital report, whatnot. All of this are coming right out of the tool. Now let's see, whether the agent has completed the activities I gave. Sorry, everything is a bit slow, but I'm sharing. Okay. So what I can say here is, these are the activities I gave the agent. It's coming up with a task plan. Yeah, it's saying these are the tasks I'm going to do, and it does all these activities. The first thing I was asking the agent to do was, show me the income and profit before tax business mix. How these businesses are performing for years 23, 24, and 25. It's able to come up with that sort of a mix, and it is able to visualize that in a pie chart, and it also gives me the commentary around it. And I also was asking, when it comes to cost income ratio and ROTE, look at all my quarters, show me the best performing quarter and the worst performing quarter. Yeah, it's showing me the worst performing quarter for cost income ratio and the best performing quarter here. And again, when it comes to ROTE, the best performing and the worst performing quarter. Yeah. And I asked it to create a, commercial banking walk across from 2022 to 2025. So it's able to see that, okay, from 2022 baseline, what are the key adjustments that are in play, when it comes to PBT, and it goes on from 2022 all the way to 2025, giving me a clear explanation why my profit before tax has moved from one year to the other. Yeah. Okay. And then I also asked, how my macroeconomic, variables are impacting the businesses, retail bank and insurance and pensions, and it's coming up, okay, these are my macroeconomic variables which are impacting my retail bank. When it comes to PBT, this is how it's impacting it. And for insurance and pensions, this is how it is impacting my my PBT of insurance business. Yeah. And I also gave it, a scenario creation task, where I said copy from version 1 to version 2, switch off a few adjustments, post a litigation adjustment of 1.2 million negative, yeah, and then do a version comparison, yeah, and it's done all of that. So if I look at this, it's able to tell me, okay, it switched off, these three, oil price easing, tariff easing in version 8. It has updated my downside litigation adjustment, and these are the variances, and this is how, version 1 compares against version 8. And yeah, and it is coming up with commentary around it. So yeah, so the FP&A agent, it's so powerful. Of course, we give them, as long as you give it the task, and as long as you have the right access to, do those tasks on the EPM, application underneath it, you'll be able to activate those, actions from an FP&A agent as well. And just like how we have done here, you save a lot of time. You just give all the grind work to the FP&A agent while you are doing something meaningful. Attend meetings. Do something. Do analysis or any other reporting that you want to do. Get all the grind work done using FP&A agent. It is going to create all your reports. It can do all actions on the scenario, when you are, creating a scenario, and it is able to produce your variance analysis, comparisons, charts, etc. So yeah, that's the FP&A agent for you.
Brilliant. Thank you, Madhu. That's you covered a lot of ground there. Appreciate that. You did a great job. Thank you. You can probably stop sharing your screen now as well if you want to. Thanks. And just a couple of things. So the EPM demonstration. So the way Revance kind of approaches these things with banks is we like to come with essentially recipes or accelerators ready to go. So the point there is that we do know what good looks like, and so we're happy to kind of share that. And what Madhu was just showing there at the end is kind of our take on, what the future might look like within the FP&A world. And we've built this in a kind of way that's headless. It supports all of the Oracle technology. You may have noticed Anthropic was there. That just happens to be Madhu's favorite weapon when it comes to AI at the moment. But it's completely headless, so we can make it work with whatever technology is preferred. And talking of technology, we've got the right guy on the call. So Andy, obviously AI is a massive focus for Oracle now, and making sure that all of your clients can fully leverage it. It's a big focus for you. Where are you already seeing people make the biggest impact, or where do you think personally people maybe should be spending more time and more focus to get more out of what Oracle already does?
Yeah, and I think it's really interesting stuff, and a fabulous demo, by the way, Madhu, as always. I think we said earlier, for me, technology, the planning processes and use of it has maybe not kept pace with technology. So there's a load of bedrock stuff that I call bedrock stuff that's been available for many years: predictive planning, insight analysis. These are basic AI stuff that the organizations, we've got thousands using it, but they're not enough using it. And then if we step forward into, what's happening over the last sort of 12, 18 months, a little bit longer, generative AI coming in. And then when we get into this whole world of, AI assistants, agents, like the one that you guys just shown, we have a very clear roadmap of what we're doing. There's already many in play and available, and we're building more out. And it's about being able to be that assistant. For me, when we look at AI, I think there's a lot of noise. And for me, we're not trying to replace finance teams. We're trying to amplify them. It's giving them the tools to work with it. You've got a great example there of what we would call interoperability. We make EPM open. Everything's REST API, nothing's closed out, not like some of the other tools. You can do whatever you want with it. Now, some of the drawbacks of that, but you've done something really fabulous. We're going to build similar assistants that are available as part of EPM. Some are already available, as I said. There's more coming. And it's all about being able to build on those and be able to build through them. So for me, again, the key thing here is, how do we accelerate things? How do we reduce manual analysis? Again, we've been able to do that for a little while. We can even get better with it. But the organizations that are doing well have already started that journey. Okay, so it's about, how do we move from this, people spending so much time moving data around, building reports, looking for insights. We can deliver that. And we've been able to deliver. AI doesn't really change it, but I think it's getting mixed in at the minute with all of those. So for me, again, but maybe that's a bit, this isn't about trying to replace, it's trying to amplify, it's giving them the tools to make this quicker and easier. All the way back to all the comments of the last hour, of where we're trying to go. So, that for me is where we're going.
Fantastic, Andy. Thank you. Lee Joy, just as we wrap up here, any last thoughts from yourself, particularly around the kind of role of AI for scenario strategic modeling?
Yeah, absolutely. See, and no, Madhu, thank you so much for the demo. It was extremely, extremely powerful. I think, I'll go back to where we started off from, right? There is a real need to make the planning process so much more nimble, so much more faster, modeling faster, so on and so forth. And reporting has been the Achilles heel for finance, right? Because while models can run, getting all the data collated together, reconciliations, all of those have been challenging. I think what we were able to showcase today is that how do you bring models together, number one. And number two, if you really want to do boardroom analytics, you don't expect the CFO and one down to click on buttons. They can actually now use these agents to ask the question, to ask it to do the stuff, and it would get all the data together. What Madhu showcased has got a super agent and lots of sub agents. So it can connect to independent cost models, impairment models, capital models. So when a top line question is asked, it can go to the detail, get all the information together, and give you the summary that you want. That effectively takes away all the time that is taken to be able to create these beautiful packs. That is easy. We've actually speeded up that process as well. So that one challenge with regard to, you can do modeling as fast as you want, how do you report it all together, is where AI is really, really helping and supporting. I think to Andy's point, what he raised, it's extremely important to understand that the openness that Oracle provides in terms of giving all the REST APIs, ensuring that we're able to connect to it directly, we're able to bring RAG together, build vector databases together, that effectively has translated to the ability wherein you're saying, sky is the limit. You imagine and you can build whatever you want around the application. So I think it's a brilliant place to be, and I'm very, very excited about what the future holds for finance. They can really now translate into, from people who are getting all the data together, consolidating number, to actually being business partners or sitting with the business and helping decision making, right? And I think that's a big benefit that the tool is having.
Fantastic. Thank you. And I think we are planning a podcast specifically around the FP&A agent, and we can deep dive into that. But right now, I want to thank everybody for joining us today. Thanks for your attention. We've explored a lot of different topics: why traditional planning approaches are under pressure because of a faster changing world. What do leading organizations do, and what does good look like? How does the right strategic modeling approach help people make better decisions? And right at the end there, what's the appetite and what's the future like with AI? So as I said at the start, I'd like to thank Andy, Lee Joy, and Madhu for your contribution. It was fantastic. We'll be sending out a link to the recording and a summary of the discussions. But for now, thank you all for your time.